Very good. Hey, Vinnie, it's great to see you. Thanks so much for having me. Chris Barbin, and wanted to talk today a little bit about Tercera and what we're up to over here as we think about and invest in what we're calling the third wave of the cloud. My background has been 25 years in software and professional services, and it's largely been shaped by the founding and eventually selling of a company called Appirio. That was in the period 2006 to 2016. We built a cloud professional services business, largely on the back of Salesforce, Workday, Google, Amazon, and had what we thought was a tremendous ride, super fun. Built an organization of about 1,500 professionals.
Chris, I met you then, and it was an impressive organization.
Thank you. Thank you. No, we had a blast. We had a blast and feel very, very fortunate. Obviously, a special shout out to my co-founders, Narinder, Glenn, and Mike for being a big part of that ride. But we ended up exiting that business to Wipro Technologies in October of 2016. And I stayed on for 2 years integrating the business. But in the last 2 years, really found myself advising and helping a lot of other services businesses, professional services businesses, with their journeys. How can they scale? How can they partner with software as a service companies? How do they build their channel strategies, their go-to-markets? And then in the last 12 months, the idea for Tercera came about. And it came about because what we were finding was that more money was coming into services-based businesses because there's a tremendous amount of capital in the markets in general. But a lot of the advice that these services companies were getting was not what we felt was great advice. And in many cases, the companies were getting overcapitalized or driven to roll-ups. And we wanted to create a different kind of firm. And so we, in October, came to market with Tercera. And we are a growth-focused investment and advisory firm that provides the combination of capital, counsel, and connections to services firms providing or powering the third wave of the cloud, which I'll talk about. And I like to say the capital's the easy part. I raised a lot of capital at Appirio. We had over $100 million from the likes of Sequoia, GGV, General Atlantic, Fidelity. The hard part is the getting the right counsel, the advice, introductions to the right people to build your team, to sell into certain key customers, to manage your partnerships. And so that's what we wanted to create with Tercera, was a firm that could help aspiring and growing services companies realize that same type of benefit that we realized as Appirio. And
You're right. The services firms have not had as much VC money or startup advice, right? So that's been solely, I mean, you probably saw it when you did your Appirio. So
yeah, no, we very much when we were kind of starting to think about raising money in 2008, we had a lot of venture private equity was like, no, we don't do services. Services is a dirty word. You can't scale it. It's too hard. The multiples stink. And we're like, well, we don't think so. We like services. We don't think services stinks. And so I like to say now that while software might be eating the world, and everyone likes to quote this, you still need people to make that software, deploy it, manage it, and use it. So, which is why we're so passionate about investing in people-based or professional services or consulting-based businesses.
Well, hopefully though, you're not just going to build another big Accenture or Wipro, right? Hopefully you have a different angle, more automation. Look forward to it. That's what I'm excited about.
Yeah, no, and we think that as I kind of talk through it, the evolution of the cloud, the adoption of the cloud in the enterprise is enabling services companies to be built differently, to operate differently, to differentiate in unique ways. And so, but we think the market's been largely overlooked. It's a huge opportunity. It's about a $460 billion space. The CAGR for cloud IT services has been growing nearly 20%. There are about, we think, 20 we call market shaping ISVs, which I'll talk about, that are leading this third wave of the cloud. The ecosystems that support it is about between 7,500 and 10,000 services firms that support these 20 ISVs and this basically $500 billion market. But there's not a single firm that is 100% focused on this area. There are, it's a partner here at a firm, an associate there, an opportunistic bet. There's no single firm that's just doing this until Tercera. So people say, like, what's this third wave thing? Salesforce has what's called Cloud 3.0. Just for the record, we came out with the third wave 3 weeks before Salesforce had their announcement.
You sound like an analyst. You got to come up with an acronym.
You have to
quadrant.
But the three waves, and we describe them this way. The first wave was all about kind of the application layer, very departmental centric. It was very much about the front office. Where Appirio kind of came in between like wave 1 and wave 2, where the second wave was around platforms, much more enterprise level, and then it was about driving profitability and performance. This third wave, we think, is much more about multi-cloud, hybrid environments. It's full supply chain, inter-enterprise, and its connectedness on a global basis. So, the milestones across these waves were things like the dot-com bust, 9/11, the financial crisis, and obviously now COVID. But this third wave, we think, it's another 10 to 20-year trend, and the services firms that are going to be built in this wave will be very different than waves 1 and 2. And they'll be built not necessarily around the Salesforce, Google, Amazon, where we built Appirio and where there's tremendous service companies, but there's an emerging set of ISVs that are listed on the right-hand side of the slide here. Those include the likes of Hashi and Okta and Splunk and Coupa and Datadog, and obviously, Snowflake's a great example. That's, they're getting a tremendous amount of attention and, crazy market cap. But there's players that have, think of these companies as 500 million to $1 billion of revenue, market caps in the tens of billions, but services ecosystems that are still very immature. They're very small companies, or it could be large SIs that are just dabbling in these practices. This is where we're focused as Tercera. And we think that there'll be very unique specialty or technical proficiencies that will be required to support these types of ecosystems, that the delivery models will be very different. We think that the delivery models will be very vertical centric. You'll have to integrate this kind of design, develop, and manage into it's not just, let's do projects, let's move them to the cloud. You have to have a full suite of services. You need to be able to sell your services in subscription or almost capacity-based models. And you got to be really adding rapid value to your channel.
Chris, to your previous slide, I would say there's another, you have enough there, but during the pandemic, I saw a bunch of vertical edge applications take off. So telemedicine in healthcare, PPP loan processing, nCino in banking, right? And in real estate, things that do virtual open houses, digital mortgages, distance learning in higher education. There's a lot of applications that don't have service providers. Now, they may be too niche for what you're looking for, but they've taken off in the last, Teladoc, for example, in telemedicine just took off, right? So
That's right. No, I agree. I mean, I think that, interestingly, as you said, it drove a level of hyper specialization, verticalization. Services firms in the past, even like Appirio, were very horizontal in nature. These services firms will be they'll have the integration of the technology and their expertise and the ability to manage that over time. In some ways, some of these firms will look and feel more like a Viva or a Velocity. They're at the core there, and a lot of those firms early, they were very heavy services firms with some IP. They became product companies. I think this merger of those kind of software and services together was going to be accelerated with, delivery models, and the fact that the cloud is everywhere now. it's not 2%, 3%, 5%, 10% of an enterprise. And so as a result, the services firms can build a much more integrated play that again looks more like a software company in many cases. So a couple more slides just to kind of cap, and then love to have a dialogue or take questions. The the big differentiator for us is that, as I said earlier, a lot of, and we're a $225 million fund. We're going to be making investments in companies, generally speaking, between 10 and 20 million. I'll show you some of the focus areas here in a minute, but the capital is the easy part. There is so much capital in the market. It's matching the capital, with the right advice and the right people. And our strategy is not going to be majority, command and control, roll up. Our strategy is going to be pick the winner. Let's go create the winner in each of these spaces. Give them, minority investments, and then be an active participant in the process. And so that's where counsel and connections come in. And we've built out a pretty robust advisory board already in our first short 6 months, which I'll talk about here shortly. So kind of capital, counsel, and connections, where capital is the easy part, connections and counsel is the hard part.
Are you finding these, as you look at your candidates for your fund, are you finding the new firms are looking at automation a little bit more, or are they still very, very body shop oriented?
No, I'd say the firm. So we have had discussions with about 250 firms already in the first 6. I will say the difference now is it used to be we'll stand up Salesforce. We're really good at running a project or a program. Now, I think there's a much more thoughtful approach, not just to vertical or industry, but how you weave IP and product into your services. It used to be, we do services and we're going to create some product on the side. I'd say it's a much more, and automation is part of that. How they drive a level of automation in their services, as part of their go-to-market as well. And now, I do think that it is and this is part of one of our advice areas. It's often a tension in a services company that thinks they want to be a product company. Those are very different DNA strands, go-to-markets, investment strategies. And so, being a services company first and being great at it and having IP and automation and technology that accelerates you, that differentiates you, and being thoughtful about where you invest is that, one of these elements of scale that we think a lot about. And so we've come up with a framework for these companies that we work with, 5 elements of scale. The way we describe it is most firms will be very good at 2 or 3 of these, and they'll need help in 2 or 3. And our approach as an investment firm is let's get alignment on the couple that you want investment around and support around. And let's really dig in there, as opposed to a lot of capital that comes in and you kind of figure this out after. We're a little more consultative up front and partnering with the entrepreneur and saying, okay, if you want help with your channel strategy, I was just on with the CEO who was asking about that, like kind of contemplating across different channel providers. A lot of times, if you're growing from 0 to 20 million fast, your operations and processes, you need support there. So let's get aligned on what that is. So we've kind of come up with this framework where we bring it to bear day one, have a dialogue with the entrepreneur and the firm, and then pick a couple key areas and have playbooks and support them through their growth strategy. So our philosophy kind of...
you're fairly young now. What are you finding? Are you having to chase these entrepreneurs? Are they starting to come to you? Are other VCs bringing you in? What are you finding?
Yeah, I'd say there's kind of 3 sources of leads, if you will. There's the proactive stuff we're doing to mine the different ecosystems. The ISVs themselves, are coming to us and saying, we've heard you're up to this. We need help with our go-to-market around SIs. Can you help strategically? But then also, here's 2 or 3 players that we like. Can you help them? So the ISVs themselves, and then the bankers. I'd say a lot of the investment bankers out there, they're saying we have a unique model. by way of, they're selling off a lot of these assets, that are grown, that are 50, 75, 100, 200 million. There's a lot of younger players that aren't ready to be sold, that need some support, that maybe need some capital. So that's a lead source for us. And I would say the entrepreneurs are thrilled to have somebody that speaks their language. Like it's not just another set of questions that are software oriented or give us another financial model. It's practical operators that have been there and done it. So our strategy, kind of middle of the bell curve here, we want to be, help create the number one or number two SI for each of these third wave ISVs. That's kind of the core. We'll make 8 to 10 investments there. And our first one, Beyond ID, is in the Okta space. So we want to go create the leading boutique in each of those. So that's kind of the core. On the left and right, left side, CRM and Now Plus, I mean, those ecosystems are a little bit more mature, kind of 6th, 7th inning, but there's many players that are looking to do the next thing with Salesforce. The next thing could be another practice. It could be verticalization. It could be some level of automation and IP. So those are interesting to us as well. Same with ServiceNow. And then there are some platform-based themes that we're working through. E-commerce is one. DevOps is another. These are areas like, e-commerce. We think there's an interesting play to have a shop that does Salesforce plus Magento plus BigCommerce plus Shopify. App dev as a theme area is there's a lot of great app dev shops or design or digital engineering services. That's a theme area we're looking at. But core of the investment thesis is right in the middle of the slide here. And then last slide, and happy to chat. I think a big differentiator is our advisory network. A lot of venture and private equity shops talk about that they have advisors that can help out. We are putting together a curated set of services experts. These are people that have been in the industry, have done it. They're either on the ISV side or have built services companies and have complementary, I call them superpowers, whether that's M&A or sales or channel building or IP. But we're, right now we're about 20 advisors.
I certainly recognize Jeff Kaplan.
There you go. There you go. And it's a way of us not just sourcing deals, but giving advice over the shoulder. And then for some of these individuals, they'll join the boards of these companies and really help scale them over time. But what's unique about it is it's a pretty operationalized network, and it's very services centric.
Yeah.
And that's it. So that's a little bit of Tercera. Hopefully that's a helpful overview. Again,
exciting.
New,
exciting. I mean, like you say, there's all the Oktas and the Snowflakes and all that. My God, they've taken off, and not too many SIs around there. So
that's right. That's right. And they all have a real interest in doing what Mark did with us. Like Mark invested in Appirio in 2007/8 because he wanted us to be a little bit of a thorn in the side of Accenture. Like, look at these guys. Look what they're doing. They're all focused on us. And that ended up working. And since then, I mean, Salesforce has made 70 investments in services companies. There's an opportunity for all of these ISVs, many of which have a lot of Salesforce executives in them, to run the same play.
Fantastic.
Good.
Chris, this is great. Good luck. Keep me in the loop as you grow.
Yeah, no, definitely will. I appreciate you having me on, and I look forward to staying in touch.